Now, before I move into that area, I want to talk a bit about the Fed rate probabilities, okay, before looking into the charts. Now, what we're having here, we now have a 73.6% chance that the Fed will be maintaining its rate at 5.25% for the coming FOMC meeting on 14th of June. Okay, so because it is above the 70% mark, those who have been following my report know very, very well that once we have a level above a 70% mark, right, that is quite I would say quite a strong probability already that we're going to see that. So based on this, we are not expecting a rate hike coming into the 14 June FOMC, but what we're going to expect next is this. Okay, so we have a scenario whereby the Fed paused the rate hike in June but resume it in July based on a theory that we have lag time for inflation to come down. Okay, because Powell has mentioned this multiple times over a period already. And with this probability, given that, there's this rate increase, we may have a pause here and then an increase here in July or in September. This can probably maintain what we call a short-term strength in the US dollars until at least it has taken out structures already. I'll be looking at it, okay, from a higher term time frame perspective, to gauge, roughly where this probable strength can end, and then the down move in the US dollars to follow next. Okay, I'm still seeing this in the midterm. It'll be going up, then bump down again for the dollar index, unless structure in the higher time frame proves otherwise, right? Now, to look into then the next area I wanted to really talk about is the debt ceiling. Over the weekend, Biden has already signed the bill, and headlines, everything say, on Friday when they approved it, the Senate approved it. So weekend, Biden signed it. So everybody is like partying in the US right now, saying that, wow, it's over and let's celebrate. Okay, you saw the US market celebrating, where the S&P 500 shot up, the Nasdaq shot up, every single one, and then news is totally bullish about this. Now, personally, to me, this crisis is averted only for the next 24 months, i.e. 2 years. Okay, now the real crisis is not the downgrade of the triple stages of the US, but the debt. Okay, now this is a big issue. Okay, because by passing this debt ceiling, it only means that the US is going to sit on more debt, and it's only going to go up. I don't see it coming down, because no politician has the intention to actually push the debt down, because that could mean the end of their political career. So that's why, regardless, any political party, be it the Democrats or the Republicans, taking over the US president hot seat, right? Regardless, I do not see signs of this debt ceiling abating at all. I only see it going up, up, up. Okay, and everybody knows the higher it goes, the harder they fall. Okay, now current US debt to GDP ratio is like, how much you owe, and then how much is the economic production of the US. The ratio is 128.1%. That's really, really high, because you know why I say it's high? Because many countries at or around this rate is already facing economic issues. You have heard in the past, Portugal, Greece, Italy, Spain, and so on, all this. Yeah, they are the countries having such high debt to GDP ratio. I know some of you who have been studying about debt to GDP ratio would say, hey, for all, it means the US can be like Japan, because Japan was the first advanced economy to reach 200% and still not collapse, right? So everybody's saying that, hey, US may be the same thing. Because right now, Japan is at 263%. The Japan debt to GDP ratio is at 263%. Now, US right now is at 128.1, right? They are not far away because the Congressional Budget Office forecast that the debt is expected to reach 200% of GDP in the next 30 years, yeah? So they are not really that far away. A few business cycles, that's it. They are there already. So that's why I don't know why they are celebrating, because they are only solving short-term crisis. It's just like, giving morphine to a cancer patient. The pain will abate for a short while and the morphine effect goes off. They're still in pain, right? So unless you remove that cancer, you just can't simply do that. It's just delaying the inevitable thing, right? And that's what I feel when every 2 years or they talk about raising the debt ceiling again and again and again and again. Even this debt ceiling, they said they want to reduce expenses. End up, they did not reduce. They maintain it as per last year. And 1 year after, this debt ceiling, they can increase their spending by another 1%. So I don't see anything else. I don't see this at all. It's still going to go up, right? So you just can't say US and Japan is the same, because we have to compare apple to apple. Okay. Now, first thing first, Japan's debt is at 6.8 trillion. We have seen the US is at 30 over trillion, number one. Now, if you look at the statistics of Japan, the debt holders right there, right? Almost all its debt is held by Japan here. So this is a true case of money going out from right pocket into the left pocket. Okay. So that's the thing. So of course they can handle it, because as long as they can handle it internally, there is no issue. But the issue only comes when you have to pay the outsiders and they are grumbling about this. So in other words, what I'm also saying, that if all the debt most of the debt, when I say most, you can see the foreigners are only holding 7.9%. So most of the debt is actually staying in Japan. So another thing is that Japan do not need the rest of the world to finance its debt, right? The US is at 74% according to Peterson's Foundation. So this is also fine, because 26% belongs to the foreigners, right? And a big bunch of debt actually belong from that 26%. The biggest debt holder is Japan. So this is considered fine because it's not a significant difference compared to Japanese debt holders. 70% is still high. Okay, this is something that I spoke about, I think, 2 weeks ago. Now, what differs here is the household spending. Oh man, spending I wrote 2 times. Yeah. Mine is still in the holiday mood. I'm very sorry about that. Yeah, it's the spending habits. Now, Japan household are savers. So this is not a surprise given the economy experienced persistent deflation. So if you keep in hard assets, right, it's down. So you cash, then okay. Now you can see that the householders in Japan, 52% of their wealth is held in cash, right? 15% in equity investment and funds. For the US, it's 14% in cash and 31% is held in equity and investment funds. Okay, so in other words, US actually invests more than the average Japanese, right? So what does that mean? That if you have the Japanese household hold 52% cash and invest 15% of the equity in equity and investment funds, so anything happens to the economy, the Japanese household can withstand with their cash holdings. because that's their habit. They are a nation of savers. They learn how to save, you know. They don't actually you know, spend much there. Okay. So Americans, on the other hand, is susceptible to an economic depression as they have less cash holdings than the average Japanese. So if you have inflation and you have an economic depression, this is a double whammy for the average American household. And this is what they are facing right now. They're having inflation. And if the US let it continue to have the economic crash, right? They don't want that debt ceiling, and they don't want to solve it, right? They have this. This is a double whammy, and no politicians would want that on their plate. Okay. And don't forget that, you know, okay, the US, like any other nations, has other commitments. It's just not only paying back its debts. Okay, the commitments is just not about paying back its debts. There's these bank guarantees. Every single country has this, right? They have these student loans. You have the student loans. They froze it, but they didn't cancel the previous one, so it's still up there. But of course, end of this month we will know, because the Republicans actually challenged this thing, what the Democrats did at the court. So we will know. But all this involves money, right? So there is a lot of money involved there if anything happens. Now, also the US has to deal with a trade deficit, which then adds more burden to the debt right over here. Okay. So Japan don't have this issue, trade deficit, like the US. So you must see, when people say, because Japan can, so US can follow same, because it's not apple, because the people that inside there, they are different in nature. So you have to look into more detail in this particular area and really think, you know, can they actually withstand this? It's totally different. Yeah. So it's a conclusion. This does not mean Japan is free to continue to grow its debts. No. Inflation is at 41-year high in Japan, and BOJ, as in Bank of Japan, cannot afford to increase its interest rate due to high debt. That will really ruin them. That's the reason why until now you don't see that. You know, even with Ueda coming in, he's still not changing it fast. But he has already mentioned, if inflation continue to go out of hand, then it will be a different scenario. Okay, so eventually, whether you like it or not, Japan would have a debt crisis on its own. They will have. Okay, if inflation goes out of hand, and they have to increase their interest from negative 0.1. Okay, so when they have that, then it's a different case right now. So no country will survive mounting debts in the long run, including Japan. Sooner or later, majority amount of debts would be towards paying interest rates alone, and that's crazy. You just think one thing, if you have a credit card payment, and because you have been spending more than you're earning, yes, you know, so you really can't pay much. So by the end of whatever cycle, you know, when you have reached your credit limit already, what is left every single month to pay is just the interest rate of the credit card. Sooner or later, you can reach that, and that's really bad, right? You're not buying anything anymore. You cannot spend anymore because you have already reached your debt limit in your credit card. And now you got to pay interest every single freaking month, pay interest. That sooner or later, something's going to collapse. So that's the reason I said, for now, like I said earlier, the debt ceiling crisis is averted. But what I've explained is a crisis which would eventually come. And when it hits, it would be a bitter pill for the Americans. So be prepared for that, you know, plan your investments properly. Yeah. So that's why, you know, when you are investing is one thing, when you are trading is another thing. They are two totally separate systems right over here. What I've just shared with you is geared more towards the long run, not the short term. Yeah. Okay. So let's jump into the charts right now, because after this short fundamental update with you guys for this week.